Hey guys, John Henry here. Really interesting day on crude oil. Another range type day, just like we saw last time on the S&P, and it goes much in the same way in terms of market psychology. We are looking to sell high and we're looking to buy low. We don't want to get caught in traps selling at the low and buying at the highs. That's where a lot of the quote unquote rookie traders will be getting in. We want to be getting out where they're looking to get in, but instead we want to be getting out with our profit targets, right? That's the key. So yesterday we ended off with a wedge formation, and that wedge, well, we really didn't go anywhere. Yesterday was pretty much a big range day as well, just much wider. It was inventories yesterday, so all of this movement here at around 10:30, that's why those big candles are there. We end out in the day getting tighter and tighter and tighter, and they try to break out of that wedge. Now initially, given that very strong bear candle at the end of the day, we gap up on today's price action, right? This was the close of yesterday, and this is today's open. We gap up a little bit from the close to the open, and we see more bearishness, but not very good bearishness, pretty weak bearishness. So sellers know that they want it, but not maybe quite yet, right? Maybe not quite yet. So we're looking at this area thinking, well, the sellers, they do want it in the long run, assuming that this is a breakout, but this might not be the right place. Although aggressive sellers will get in, it's more likely going to be a trap initially, and that's exactly what happened. Weak sellers get in, they try selling down for a continued move lower, and they get stopped out above the highs, only to see it go right in their direction. Now, why do I like selling up here rather than over here? Well, right here, we haven't really seen much from the day yet. We have a weak bear candle to start the day after a gap up. That's not really what I want to see if this is going to be a breakout move. We do get a very strong bear candle right here, but it's just inside the last candle, so we really haven't seen much. We're not seeing that conviction from the sell side. And then we turn back up. So we know that there are aggressive sellers in here. Their stops are going to be above the highs. If this is going to fail on them and break out, we should see a very strong bull candle with bullish continuation, right? Think like over here. You get the big move up and they continue it higher. They keep that driver's seat going north. In this case, we get that big breakout, but then it immediately turns down. That's the exact opposite of what you should see if it's going to be a breakout move. And now this starts turning into a stop run for a major order fill to drive this back down. And that's why we have a short here to go back in that direction. We're looking for the lows of yesterday at the end to see if they want to break out to that area. And that gave us a beautiful move all the way back down to that area. They fill the gap, and then we start seeing some trouble again. Now, what's going through the minds of the traders here? Well, we're at the lows of an otherwise pretty rangy day, right? We went down, we went up, and now we're down again. Are we going to continue breaking down? Well, if we had some better candles maybe, but it went bear, bull, bear, bear, bull, bear, bull, right? We're not getting that good follow through. It's not going consecutively bull, 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 bull. We're not getting them hammering one side of the market, and that's showing us that we're probably in a range. So we have to look to buy low. And if we're buying at yesterday's close and you can see the range started right there, we're pretty low, right? We're looking for a low move, and that's exactly where we are. So we need to start switching gears into thinking maybe we should be buyers. We get a strong bear attempt to break down. Sellers will inevitably try to take that, looking for that breakout move lower. Just like we saw up here, absolutely no follow through, and it turns right back higher. And that is a beautiful reason to fade the lows of a potential range and drive that market right back up to the highs again. We get that move up, and this time, instead of going all the way back up to those highs, they fall a little bit short and turn down with a heavily aggressive bear candle. Now, at this point in time, I think everybody's on the same page in that we're in a range, right? This is very obviously a range. I don't want to buy up here. I want to sell up here. And then we get this massive candle. There are going to be sellers that sell that thing like crazy. What's the problem? The reason why you don't sell a candle like that on a range day, it's too big. It's way too big. The move is done. It finished the entry and the target all in one candle. There's no reason to get into that trade yet until we get some more information. The bulls finish the job off. They come back to those highs. We get a huge blow off on the top side. Again, no follow through, rinse and repeat. Sell the high and drive that back down to the lows. Beautiful range trading day today. I don't think you can ask for a much better combination of market psychology as well as technical analysis, and this is how you put them together to have one wonderful trading day. So hopefully you learned something, hopefully you found it enjoyable, and we'll see you next time.